And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show, the show where we bring you where the action is in the broader markets. Another bumpy period over this last week, very much dominated by tariff-related news and earnings. Lots taking place beneath the surface. I look forward to sharing all of that with you. Let's take a look at some of the data items that are due next week that are expected to be impactful. First up, we will get key inflation data. That's going to be that CPI number, and that's on Tuesday. We're also going to get retail sales, industrial production, and consumer sentiment. These are other areas that are being closely watched by investors, and the chances for a Federal Reserve rate cut in September has increased to 90%. I'll share with you exactly why and how you can stay on top of that. And then also next week, China's baseline 10% tariff is going to be reviewed. That's on the 12th, so that's next Tuesday. You will want to be on alert for that because of such massive impact that news is going to have. And then we do have some key earnings reports next week as well. Two pretty volatile IPOs are due to report, and that is Circle Internet, CRCL, and CoreWeave, CRWV, among other names. So let's go ahead and take a look at these broader markets and see where did we close for the week. And here we are with the daily price chart of the S&P 500. And you can see the bumpy period that we had last week with gains and losses, but we did end the week back in positive territory, and that's because we are back above that 10-day simple moving average. We have a positive RSI. As you may recall, last week we ended with a negative RSI, so good to see that back in good standing. And then also we have that MACD up above that net neutral in positive territory. So from here, let's go ahead and take a look at another view of the broader markets, and then this will become evident throughout today's show. The fact that the S&P 500 equal weighted, we're still not quite in bullish territory here, and you can see that the RSI is below that net neutral 50, and then we have that MACD heading downward. So in the end, there is a specific area of the markets that are propping up the not equal weighted version higher. And then also we can take a quick look at the Nasdaq, and I will share with you that that index is also in a nice confirmed uptrend. It did not have a RSI that turned negative, but it is in a more positive phase. And then also we are closed above that 10-day simple moving average with a positive MACD. So let's go ahead and take a look beneath the surface. These are the 11 underlying sectors in the S&P 500. 2-month daily price chart view sorted by relative strength, and it is in descending order. So in essence, we have the S&P 500 sitting up here. As noted, the broader S&P 500 index was up almost 2.5%. And you can see the one area that did outperform is technology. This is actually, there were two areas that outperformed. Technology was one of them, up about 3.5%. Let's take a look at some of these other areas that are faring well relative to your weaker areas down here in this right quartile. I did want to share with you XLY. This is the consumer discretionary. We're going to take a look at that retail group chart as well, but you can see that we are back above that 10-day simple moving average and a positive RSI. Now, a lot of that is going to be Tesla and Amazon, but there are other bright spots as well that I will share with you. Also up here at the forefront, utilities, they did not fare well overall, up less than 0.5%. However, sitting up here in a very nice confirmed uptrend, all about that increased need for electricity and other energy providers, given the demand for AI data centers and elsewhere. Also taking a look at some of these other groups of note is the fact that healthcare had a very tough week. It was down almost 1%. Eli Lilly among several of the major decliners in this healthcare area, and it is continuing to struggle. Certainly, we have a lot by way of policy shifts relating to vaccine and other news in that healthcare area that is really keeping it rather depressed. Up here we have XLC Communication Services, and the group was up about 1.5%, but there was one subgroup in here, not so much internet related, and that is telecom services. We're going to take a look at a name in that area that really helped that communication services sector sitting up there at the forefront. Now, let's go ahead beyond these sectors and take a look at some of these sub-industry groupings that really impact those sectors. This is all about refining your view of strength relative to weakness in the markets on a regular basis. So we have these ETFs, again, sorted by that RSI in descending order. And we do have that S&P 500 up here at the forefront. But let's take a look at some of these other areas that are somewhat newer. This is XHB, and this is the Home Builders Industry Group. We're going to take a look. I'll share with you how you can very quickly assess where the strength within home builders is. That's going to be using Stockcharts sorting service. And we can see that we are back up here in an uptrend. Let's take a look at one of the reasons that these home builders are on the move higher, and I don't see it listed here, so I am going to go ahead and share with you a view of the yield on that 10-year Treasury, and you'll see that this is that drop last week after we had that weak employment data, and we've clawed back a little, but not a lot. We do still have relatively low 10-year yield, 4.2, and that's one of the reasons why those home builders are faring well. And then also earnings reports that are coming out constructive. Another area that is also being positively impacted by that decline in interest rates is also going to be consumer discretionary related, and that is XRT. This is the retail ETF. You can see that we did get down below that 50-day simple moving average and have progressed higher. We're going to take a look at some of the names in that retail space, primarily larger cap, so that you can stay on top of that. And then good news here with volatility. It is down at that 15 level, well below 18, which is viewed as an elevated position and fear spreading. But at this point in time, we are seeing volatility generally decline, and that is certainly a good backdrop for the broader markets. Let's take a look at semiconductors. They had been struggling here. You can see this bouncing around, a lot of tariff related and other news. However, we did end the week up, and we are just on the cusp of closing back above that 21-day simple moving average. The overall group was up about 2.5%, and it is still going to be AI related stocks, but also a lot of these smaller names are coming into play. Let me go ahead and share with you the Russell 2000, not looking overly bullish, but it fared well, up 2.5%, and that's relative to the S&P up 2.4%. So it is sitting up here, not overly vibrant. I will want to see that MACD black line up through the red to confirm a new uptrend, and then have this index close back above that 21 and get that RSI so that it is experiencing liftoff. But in the end, last week was a pretty vibrant period for those small cap stocks. Also moving through, you want to be aware of the fact that bank stocks are not really faring that well. This is KRE, that regional banking ETF, and it was up a little less than 1.5%, but it does have that remaining presence below this 50-day simple moving average. And generally speaking, a lower interest rate environment as it relates to lending activity is not going to be as constructive for that area. And then also, it is an economically sensitive area, and investors are still focused on that very weak employment data that came out, where they revised prior months quite a bit lower, and we can see the impact on those economically sensitive areas of the market. Biotechs also faring less, and they were down almost 1%. This is another reason that we are seeing the healthcare XLV sector not faring well. So from here, let's go ahead and take a look at one area of the markets that fared really well. This is going to explain a lot as far as why the broader S&P fared better than the equal weighted. So we're just going to take a look. This is the M7 names. Quite simply, their performance over last week. Take a look. Apple up almost 13.5%. Tesla, now these two had been laggards going into this week, but both experiencing really outperforming. Alphabet up 6.5%, and so on. So you can see where this would easily impact as far as the broader S&P 500 relative to that equal weighted. And there is one name here I did want to share with you because it is coming back into play. This has been a long time MEM Edge report suggested holdings list going back. And we have periods where we've taken it off of the suggested holdings list. However, we've outlined that longer term investors can stay with the stock. That did take place back here after the release of their earnings. It closed below that 50-day heavy volume, advised to exit for near-term investors. Longer-term investors stay with it, and it's setting up here really quite nicely. Let's take a look at the Nasdaq 100. Now, the Nasdaq overall was up almost 4%. However, the equal weighted Nasdaq 100 was up less than 1%. So what I wanted to share with you is a view on these individual names and taking a look at the top performers over the last week. And you'll see it was not dominated by technology, although it is represented up here, but we can see IDXX, MNST, both of these companies reported earnings last week, and Match.com. So as we move through these top performance, you will see a sprinkling of stocks up here at the forefront performance-wise that are not the M7 names. Ross, we did see a move into some of these discount retailers and so on. So that really gives you a good feel for what took place last week. And more importantly is that most of it was earnings driven. So from here, let's go ahead and take a look at a different view that can be really quite helpful as far as really pointing you toward strength relative to weakness in the overall markets. And we're looking at what I'm calling an ETF tracker, and it really drills down even further. So we can take a look at these top performers. It's sorted by that relative strength indicator in descending order. And up here at the forefront is this Renaissance IPO ETF. We've seen a resurgence in new issuance, and a number of these names are faring really quite well. I mentioned two of them that will be reporting their earnings next week, but that is of note. And then also up here at the forefront, XME and other names that are related to the rare earth. Let's take a look at REMX. This is Van X Rare Earth. And you can see really it has been volatile, but on this pullback that took place the week before last, we did have an RSI that remained positive, and then we are seeing a re-emergence into these needed rare minerals for AI-related activity. And then from here, you can take a look at some other areas. Another item that struck me as far as taking a look at that relative outperformance is it's J and K. This is the S&P Barclays high yield bond, and generally a move into these junk bonds, which we have experienced significantly since coming out of that bear market. This is indicative of a risk on appetite among investors, and we can see that with the broader markets as well, hitting a new high. So let's go ahead and take a look beyond here. I wanted to share with you other activity from last week. I did mention about the retailers. Let's take a look at a couple of names that are larger cap, well known in that retail space, and are exhibiting signs of potentially turning. Now, Walmart actually did turn. We can see this sharp advance on Wednesday and nice high volume. And with that, we did get that black line up through the red, signaling a new uptrend. So from here, you want to be on the lookout for a potential move back above that February high, and we can see that we are advancing fairly close to that. And as always, the longer the base prior to your breakout, historically, the longer your advance out of that base, but you will want to keep an eye on that RSI as it is sitting up here in an overbought position. Another large company that is viewed as a competitor is Costco, and it is potentially a little bit earlier in its possible downtrend reversal. But this is where those numbers next week relative to retail sales data and consumer sentiment are going to impact. But we can see with Costco, the stock is back above that 50-day simple moving average. We have that black line up through the red and a positive RSI. Now, this deterioration back here had everything to do with the company monthly reports their same-store sales, and the numbers were weak. You can see the swift response, but we are in the throes of reversing that downtrend. Let's take a look at another area. I talked about home builders on the move higher. And with that, oftentimes you'll see a move into the Home Depots of the world. You can see that we have this move, this nice actually triple bottom where you have higher lows. And then we've moved back above that 200-day simple moving average, positive RSI, positive MACD. And the thinking here is as home buying comes into play, people will be doing potential remodeling, and you will see a move into lows, not quite as strong, but also in the throes of potentially reversing its downtrend. Let's take a look at a retailer that reported last week. I believe they did, and they are on the cusp of potentially reversing that downtrend. This is Abercrombie and Fitch, ANF. We will need to see a move back above that 200-day simple moving average. And I want to share with you a longer term view. The reason I keep an eye on stocks such as Abercrombie, I'll share with you another name as well, because it does have that predisposition to fare really well. And by that, I mean really outperform the broader markets. They have a lot of systems in place, a management team, and so on. So on the weekly chart with ANF, you can see that we got that RSI into an oversold position down here below 30. And more recently on the weekly, we are now back up here in positive territory. Of course, the weekly chart is going to be more useful relative to the longer term outlook, and it's looking quite constructive. Another area that we can take a look at is some of these companies that reported earnings. We talked about the volatility last week in the broader markets, and it certainly spread to these companies that came out with earnings where you would see an initial response, and then over the next day or two, it would attempt to reverse it. Actually, I do not want to start with this one. Let's take a look at NEU. And this is a company that they are the sole provider of rocket additives, and having this product, the only company that puts them in a very unique position. This is a daily price chart of NEU. And what I wanted to share with you is going back, this is actually the week before last, they came out with their numbers and the stock dropped pretty significantly. It was all about a slight decline in their revenues. But we can see since then that the stock has reversed and is trending higher. So we'll take a look at a couple of other examples so that you can know how to potentially treat your stock if it has a significant drop on earnings and anticipating that it could reverse that downtrend. So we're going to take a look at an hourly chart for NEU, and I will share with you a couple of dynamics. So here we are with that drop subsequent to earnings on the hourly chart. So had you owned the stock and experienced that drop, this is the type of view that would really be very, very useful as far as defining your next move should you sell on the news or not. So we can see with NEU fairly swiftly, we did have that MACD crossover black line up through the red. We had a bullish RSI and then a move back above the 5 and 13 hour simple moving average. And then of course, since then, we've had a nice move higher. Let's take a look at a couple of other companies, and these are going to be names that did report this past week. First up is Spotify, another example of a company that declined heavy volume on their earnings release, but we can see that downtrend reversal that took place and then being confirmed with this MACD black line up through the red as a potential new uptrend. We can also go ahead very quickly and take a look at that hourly chart as a guide so that you can know how you may want to, whether you would want to stay with the stock. Actually, this is more descriptive. Here we are with that gap up on earnings, and then it immediately pulled back. So with this 1 hourly, once we get back above that 5 and 13 hour simple moving average, I'll go ahead and refine this view, mark it up for you. So as we go back up above that 5 and 13 hour, combined with a bullish MACD and a bullish RSI on that 60-minute chart, you would be well advised to potentially stay with the stock. Another one that we can take a look at that came out with earnings today, and this is Pinterest, PINS, and the stock dropped very significantly. They were sitting up here quite nicely, and in a surprise move, they came out with numbers that were not up to par or above expectations. So we can see on the daily chart, I can just take a minute here and highlight the fact that we now have a negative RSI and a move below that 50-day simple moving average on heavy volume. So no matter how you look at it, it is in a position where it should be sold, but we can drill down into that intraday just as far as, do you sell it immediately? Or do you, in fact, give it room? So here we are with Pinterest. Here we are with that gap down in response to earnings on that 15-minute. Really just takes a second, but it's going to give you that refined, really close-up view. And we can see that Pinterest, after that initial drop, it did have a rally attempt. However, we did not get that RSI back into positive territory, and we did not get a close back above these shorter term moving averages. Likewise with this secondary rally attempt into later today. And then you can see that we receded so that we closed very close to that prior low. We can take another very quick look here at that hourly chart, and you'll see very similar dynamics in the sense that we had these rally attempts that would last an hour or two. But again, we did not get back above these moving averages, and we did not get a bullish move on that RSI. So if you did own the stock, it did exhibit weakness well into the close. So not looking particularly compelling there as far as their near-term outlook. I talked about IDXX. They were one of the top performers for the week in that Nasdaq 100 view. And here we are all about earnings gapping up. And oftentimes you will see a pullback, certainly given volatility that was in the broader markets overall. And from here, as long as we have this RSI appear in positive territory, as well as that MACD. You're still sitting up here quite nicely. We'll just take one last view of that, how that intraday chart can be helpful once a stock does exhibit that gap up. So we did have a pullback that took place midweek on this 1-hour chart. However, the RSI stayed in positive territory, and that's going to be your ultimate guide as you drill down very super closely into some of these near-term areas, some of these names that have a gap up. Let's take a look at another area that was impacted by earnings, and that is going to be Coinbase as an example. And then from here, I can share with you other names that are also going to be impacted. So here we are with Coinbase. They came out with numbers, gapped down, and we're not getting that recovery. We're still down below that 50-day simple moving average. It's all about the fact that Bitcoin is firming up, but the monetization has not taken shape. And then also we were sitting up here close to new highs before the company released their earnings. So from here, we can take a look at other names that are in peripheral cryptocurrency areas, and you'll see very similar price action. This is RIOT Platforms, RIOT, a close below that 50-day simple moving average, negative RSI, and now we have a negative MACD. So this is the type of dynamic that you can keep an eye on if you own stocks that are in a particular area. I talked about how you can quickly assess strength in a sub-industry group. And for instance, we were talking about home builders that were on the move higher. So we will from here do what's called a sector drill down and can take a look at XLY, that consumer discretionary group. And as we move through, we can also, as long as we are here, I'll share with you the different views that you can get relative to the performance. So we're going to key in on that 1 week movement. I talked about those home improvement retailers. Let's take a look at home construction stocks. A couple of things I did want to share with you as well. We also have that Stockcharts technical rating over here on the right, and it's also for individual stocks, it's also for these sub-industry groupings. So you can see that 80 is a very healthy ranking for an industry group. So from here, clicking on to the name of that industry group, you can get this view. First up is going to be performance, because we asked for the 1 week performance, but let's go ahead and sort it by this Stockcharts technical rating. And this is something you'll see if you take a moment and drill down elsewhere into retail, where there are a handful of names that are really sitting up here quite nicely. And then as you can see, this Stockcharts technical rating tends to recede. So your stronger and what I would call your leadership names are going to be sitting up here at the forefront. Let's take a look at DHI, that is DR Horton, and we're going to go ahead and pull up a chart. And what you'll see, this is in response to earnings. The company, this is going back 3 weeks, they had a gap up back above 200-day simple moving average. And then from here, we have these nice upward trending 10 and 21-day simple moving averages. So oftentimes that stock that is first out of the gate as far as exhibiting that strength will go on to be your leadership name. But again, you can go ahead and sort this. And what you will see also among these groupings is the fact that there are an awful lot of smaller names that are sitting up here at the forefront. But let's go ahead and take a look at another large cap home builder, and this is Pulte, PHM. So a lot of them are going to have this view where they have gapped up ideally on earnings and then retained a presence above these longer term moving averages, bullish RSI, and then you start getting these shorter term moving averages moving above the longer term, known as a golden cross, a secondary indicator, but quite constructive. And that is it for this week, everyone. If you like what you've seen, go ahead and hit that like button. As always, I welcome any questions or comments down below. Have a great rest of your weekend, and I'll look for you here next Friday.